The broadcast is now starting. All attendees are in
Hello everyone
listen-only
and
mode.
welcome to today's webinar. My name is Jacques and I am the Forex educator in South Africa. Ladies and gentlemen, today we are going to discuss the Bollinger Bands Strategy. But before we continue, if those of you can hear me and see my screen, if you can please just indicate for me as such. Thank you, Prince. Benedict, Danny, David, thank you so much, guys. Okay, David, you say you cannot see my screen. Alright, guys, if you can please indicate to me if you can see my screen and hear me, that would be lovely. So we can make sure that the technology is all up and running. Sirach, Nathan, guys, thank you so much. It seems like everyone can hear me and see my screen. That's lovely. So, ladies and gentlemen, as I said, today we will be discussing the Bollinger Bands Strategy, backed by popular demand. So, thank you guys for being here, and I'm looking forward to spending the next hour with you. Okay, so let's quickly delve into the contents for today. Just exactly what we are going to discuss. So first and foremost, I just want to give you a brief introduction as to sometimes how we are doing things the wrong way. And I'd like to do that by means of an illustration. From there, I'll give you guys a rule that I believe you can apply in any trading strategy. This does not necessarily have to be the Bollinger Band strategy. It can be your own strategy, but it's some fundamental rules. And by fundamental, I don't mean fundamental analysis, but rules that span to be true across a wide spectrum of trading strategies. Okay? Then I'm going to discuss a bit about indicators with you guys. And from there, a second rule that, again, I believe to be true across a very wide range of strategies. And from there, we'll discuss the entries for the Bollinger Band strategy that we are doing today. Okay, entries is very important, but from my experience, ladies and gentlemen, your exit is way more important. Okay, because we can have two traders that enter the market at exactly the same time, but the one will exit with a profit and the other one will exit with a loss. Or we can be two traders that enter at exactly the same place, but the one will exit with a 5 pip profit and the other one might be disciplined and patient enough to exit with a 100 pip profit. Okay, so according to me, your exit is much more important than your entries. And I'm not saying that your entries is not important. That's also a crucial part of a strategy. But the way you exit, for me, is the most important thing. So coming to exits, we've got take profits and stop losses that help us to manage our exits automatically. So these orders are sent to the broker. So even if your computer is off, you will still be able to, or the market will still, to a very big degree, obey your stop loss and take profit. Now, apart from a stop loss and a take profit, I also have some exit rules. Okay, so this is not so the exit rule is not based on a pip amount like a take profit or a stop loss. These exits are dynamic, meaning we will wait for the market to tell us, okay, now is a good time to exit, or no, don't exit now, I'm still trending. As the market, I'm still trending, so don't exit now. Keep your position, okay? So we will look at some exit rules, all right, and how they differ between the take profit, the stop loss, and we look then at our exit rules itself. Okay, now, as you know, guys, the market has got different phases. There's ranging phases or consolidation phases, there's trending phases, and there's a lot of different names and terminologies and theories out there. But at the end of the day, we all know that the market has got different phases. And I mean, A simple way to see this, if you have a trending strategy, it will outperform a lot of other techniques when the market is trending. But if the market is in a range, okay, your trending strategy will probably not do so well. Okay, so what the job of the filters is that we will discuss a little bit later, is to try and only take the positions or the entries where we feel that most likely the market is favorable for our strategy. Okay, then we'll quickly look at what type of traders you get, the different type of traders, and we're not going to go into a lot of detail regarding the psychology, but what I can say, guys, is that having a good strategy is not enough. You will need some psychological and mindset preparations to help you succeed in the trading business. Okay, and we'll look a little bit about we'll go a little bit into that today as well. And then before we go to the Q&A, the question sessions, I'll explain to you guys a very simple but extremely powerful technique to help you keep your trading psychology intact. Okay, so I will explain to you guys a little bit about a trading plan, how it works, how you set one up, and I'll give you an example of a trading plan I personally use for this Bollinger Band strategy. Okay, so ladies and gentlemen, this is what we will discuss for today. Like I said, I'm so glad all of you are here, and let's jump right into our presentations. Okay, so we all have some friends and YouTube channels and websites and books. I mean, there's a lot of different sources where we get our information from. So usually what happens when we start out with trading, and now guys, I'm speaking for where I started as well. So let's say I started with Bollinger Bands. So I said, all right, let me add a 1 and a 2 standard deviation Bollinger Band to my chart. Okay, but now my one friend who's also been trading for a while, he says, no, moving averages, that is the thing to do. So what do? I add a 50 period and I add a 100 period moving average. Okay, and after that, I saw this YouTube channel, and they say the RSI is the best indicator in the world. So what do? I add a RSI to my chart. And after that, I add the ATR. Okay, why? Because I read in a book that the ATR and the average daily range, that is one of the best techniques you can get. You cannot go wrong with that. Am I right, guys? Do we usually step in the traps? Okay. After that, I saw a video of Bill Williams and the alligator strategy on YouTube, and definitely let me try the alligator strategy as well. So what do? I add it in the mix. Okay. From there, MACD, I added zigzag. My one friend said it is excellent for finding tops and bottoms. Okay. And after the zigzag, what do? I add the parabolic stop and reverse. After that, I add the Ikimoku, Ayu, and guys, don't forget the stochastic. Alright? So ladies and gentlemen, does this look like something that can make you money? Alright? Give me a shout if you have stepped in the same trap like I did and many other traders by killing your chart with so many indicators. So guys, if you've also stepped in this trap, just send me a message, and yes, you'll be surprised. Alright? Nathan, Prince, David, Benedict, exactly, guys. Usually that's where we start out. Okay? Overpopulating our chart with so many indicators. Alright. Now, the first rule, and this is exactly what I said. This rule applies to almost any trading strategy. Okay? Simplicity is the ultimate sophistication. So Leonardo da Vinci is the one who said this. Okay? And I believe this to be very true in trading. Okay, yes, Chukwulemeka, sorry for the pronunciation, indicator overload. It's called, that's exactly so, all right? David also says he can relate to the indicator overload, all right? So guys, the first rule, all right, simplicity is the ultimate sophistication, okay? So to keep your things simple is only beneficial for yourself. Why is that? Why do we want to trade a simple chart and not a chart like this? Okay. Firstly, do you think you will be clear when there's an entry or an exit rule here? No, you'll never be clear. You'll never be certain whether it's an entry or an exit rule because the moving average will say buy, the stochastic will say sell, the MACD will say do nothing, the RSI will say buy, Ichimoku will say sell. So at the end of the day, you've got 20 different signals and you still don't know what to do. Okay? So, ladies and gentlemen, my first rule for you, whether you trade my Bollinger Band strategy, whether you trade whatever strategy, try to keep your system as simple as possible. Okay, I think that point came across now. Let's look at the next one. And this is my second rule. Okay? So, there's a popular strategy saying, all right, if a market is in a range, as you can see here, and the stochastic and RSI, so for those who don't know, this is two indicators, okay, and this is the price itself on top there. So the indicators has got overbought, it's above the black line here, and above this one over there for the RSI, that's called the overbought territory, and below the black lines is called oversold. Okay, so basically what it means is that if an indicator has been sold too much, okay, that or if a currency or an instrument has been sold too much, the indicator basically says, okay, everyone sold it, we think now will be a good time to buy. Okay, so that's basically what this indicator is telling you. All right. Now, if the market is in a range and the indicators are overbought or oversold, all right, you take a signal. So let's look what happened here. All right. So as we can see, the market is in a range and the stochastic is in oversold territory and the RSI is in oversold territory. So what do? According to the indicators, we must buy. So what do? We buy. So we buy right over there. And what happened? Oh, the market went down. But look, here's another signal. The indicator, the stochastic says buy. The RSI says buy. Okay, so what do again? We buy again. And a little bit later, the market still went down. Okay, so what do? Say, okay, but look, RSI is still in overbought territory, and stochastic just exited the oversold territory. So definitely, this time, price must go up. Okay. So what do? We buy again because stochastic said buy, RSI said buy, and what happened next? Price continued to go down. Okay. So my next rule, rule number 2, guys, I would like to illustrate with a story. So one day there was a king, and this king had a couple of servants, right? And the first servant's name was MACD. The second servant's name was RSI. The third servant's name was Bollinger Bands. And the fourth servant's name was the simple moving average. Now, ladies and gentlemen, who can guess the name of the king? Who can guess? What do you think is the name of that king? If we talk trading. If the servant's name is MACD, RSI, Bollinger Bands, and simple moving average. Okay. Benedict says traders, almost there. Julius, price action, you're very close. Come on, guys. Who do you think? What do you think is the name of that king? If this is the servant, okay, Nathan, the market. Okay, there's another one. Someone who said price action. I cannot see your name now. Waiting for name 160. Okay. Guys, you are very close if you say price action. The name of the king is price. Okay? Amal, no. Amal says I'm the king. No, Amal, I'm not the king. I'm only the FX educator that's presenting this to you. Okay. Abiola says she's a new trader to Forex trading. Okay. Okay. Barnabas, price. Excellent. Barnabas, that you are the correct one there. Barnabas said price. Okay. Guys, thank you so much for your answers. Price is king. Okay. Price is king. Why do we say that price is king? Okay? Why do we say that? All right? Let's go back and see. Let's go back to this. Okay. Having or trading based on the indicators, okay, is like, let me give you guys an example. Let's say you go and look at the Olympics, and you are looking at, or you want to go and experience the gymnastics session at the Olympics. Okay, so you know there's the gymnast, and he do all his gymnastics, and he swing around the pole, and he makes somersaults, and he does all the things that he's been practicing for years. So that, I mean, that is the show, gymnastics. But when you go to the Olympics, instead of looking at the gymnast when he performs, you turn your back to the gymnast and you look at the judges only, and you look at the boards. 8 out of 10, 9 out of 10, 7 out of 10. Okay? So you never even looked at the gymnast. You looked at the judges who show the boards. Okay? Now, in trading, it's 100% the same. The price is the main attraction. The price, you cannot argue with price. The price of gold, or the price of Euro USD, or the price of oil is the price of oil. That is the price, and we are trading the price. So what do we usually do? Instead of looking at the gymnast or the price, okay, we look at the judges and we ask them, how does the performance look? Okay? So this is exactly the same with the trading. Looking at the indicators, okay, is like looking at the judges, because the indicators are derived from price. All the indicators is just a different mathematical representation of the price. Okay? So the main thing is price. Also, ladies and gentlemen, when we trade, we make or lose money based on price movement. We bought here, we bought here, we bought here, and we kept on losing. Why? Because price went down. And we make or lose money based on price movement. Even though the indicators go up, we're not going to make money if the indicators go up. We're going to make money if the price goes up. So, always remember, guys, always remember that price is king. Okay? We are trading the price movements, not indicator movements. Okay, so that is my second rule, guys. First one is keep it simple, and the second rule is follow price, not indicators. And ladies and gentlemen, by this I'm not saying, okay, that indicators, okay, is not important. Indicators are crucial, okay, but okay, we will first see what price is doing, and then we can ask the indicators some advice. Okay, now concerning price that we said is the king, the bigger the time frame, the more power this king has. So always remember that. There's one question I always get, which is a very legitimate question, guys, is what time frame do you trade on? And I'll answer that a little bit later in the strategy. But for now, guys and girls, remember that price is king, and the bigger the time frame, the more power that king has. Excellent. Now, let's look at a few of the indicators that we will be using. Okay, just before we go there, okay, there's a few questions. All right, no, I already answered those. Okay, perfect. So now, what is the indicators that we use? Okay, firstly, we said this is the Bollinger Bands Strategy. So, obviously we will start with the Bollinger Bands. So this is how it looks. This is a 20 period, 1 standard deviation Bollinger Band. Okay, that will be our first indicator. So you will see 3 lines. Okay, 3 lines. The middle line, or the Bollinger middle line, or the 20 period simple moving average, okay, is nothing else than a 20 period simple moving average. That's it. Okay. Then from there, we've got a top and a lower Bollinger Band, a 1 standard deviation band. Okay. So this is the first set of indicators we will put on. So what I'll do, I'll quickly go to MetaTrader 4 and I'll show you guys exactly how do we add that indicator to the chart. So over here, I've just got a random chart. I think this is here, US dollar, US Canadian dollar, 1 hour chart. And what I will do now, I will just add the Bollinger Bands to this. So what I do, I go insert, then I go to indicators, scroll down, and when I go to trend, it will give me another few options and I click on Bollinger Bands. So what I personally do, it's always a 20 period. The deviation is 1 and the color, I make it blue. And then I say, and usually I make the line a little bit thicker, so it's very easy to see. Then I just say, okay, there we go. This is our Bollinger Bands. If I zoom a little bit out, you will see that quite clearly. Okay. So I hope that is clear, guys. This is very simple to add our first indicator. Okay. Now, okay, I think for today we will not go too much into the calculations, but the middle line, okay, which we said is a 20 period simple moving average. So for the sake of clarity, I usually make the middle line black. Okay, but let's quickly talk, and I'm not going to go into detail about this, guys. Usually in the workshops, I spend a lot of time explaining the indicators. Okay, and I found that to be very effective for people to understand not just when to enter, but why they are entering, and not just to know what indicator to add, but to understand what the indicator is telling you. All right. So guys, if I ever come around for a workshop or a seminar in your area, I will spend a lot of time to explain this into more depth. Okay, but for now, I think I will skip this so we can get to the entries and exits. Okay, standard deviation also I will not go into detail with regards to that. Okay, now the second indicator we are going to add, okay, is the 20 period 2 standard deviations. Okay, and again, it's a 20 period simple moving average in the middle. The 2 standard deviation lines over here and over there. So we've got the 20 period moving average, the 1 standard deviation line, and the 2 standard deviation line on the top. And at the bottom, the 1 standard deviation line at the bottom, and the 2 standard deviation lines at the bottom. So let's quickly add another indicator. So I'll go to my MetaTrader 4 platform. What I'll do, I'll say insert, exactly the same steps. I go to trend, from there I choose Bollinger Bands, but this time it's not going to be a 1 standard deviation, it's going to be a 2 standard deviations, okay, and I'm going to make it red. Say okay, now we have 2 sets of Bollinger Bands, but the middle line, I still want it to be black. So I'll go insert, indicator, trend, now I'm looking for moving average. Okay, I click moving average. It's going to be a 20 period moving average and a simple, and I'm going to make it black. Say okay, and there we go. Okay. Okay, ladies and gentlemen, it seems like we had a small cut in communication there. Ladies and gentlemen, if you can just give me an indication if you can still hear and see my screen. Okay, Benedict, thank you so much. Excellent. Okay, guys, thank you so much. I think there was a moment I got a message here that the sound was away, but it seems like we are all back on track. Excellent. Okay, so guys, this is our basic setup for the Bollinger Band strategy. Okay, and to recap, I'm going to zoom a little bit in. We've got a Bollinger middle band, which is a 20-period simple moving average, and that's the black line. Then we've got the two blue lines, a 1 standard deviation and a 1 standard deviation line of the 20-period Bollinger Bands. Then we've got the red lines, which is 2 standard deviations. Okay, and right, so that is basically our setup. Okay, Barnabas, I'm going to repeat the strategy again. So I'm going to run through the initial part a little bit faster, okay? And because I see there's a few questions, guys, people want me just to recap. All right, so I will recap on this again in a few slides, and I will give you guys a lot of practical examples, okay? But basically what we've done here, okay, we've set insert, indicators, then we went to trend, and then we added our two Bollinger Bands as well as our simple moving average. Simple moving average in black, 1 standard deviation Bollinger Bands in blue, and 2 standard deviation Bollinger Bands in red. Excellent. Okay, now let's get to the fun part. How do we enter? Okay, how do we enter a trade? All right. The first condition, guys. Okay, and this might look fast and confusing initially, but I will make this very clear as we go on. The first condition, we must have two candles that close in between the upper and the lower 1 standard deviation bands. So, the second condition, we must have the next candle immediately. There must not be other candles in between. Okay, the very next candle must close outside, okay, the upper or the lower 1 standard deviation bands. If it closes outside the upper band, okay, that's going to be a buy. If it closes outside the lower band, that will be a sell. So let's look. Do we have two candles where the close, and remember guys, this is an orange candle, so the close is, never mind where the open is, we are looking at the close. That's very important, guys. We're looking at the closing price. So the closing price of this candle, okay, is in between the two blue lines. The closing price of the next candle is in between the two blue lines, and the closing price of the third candle is outside the blue line. So that means it's a valid buy. Now, where do we enter? Where do we put our stop loss and our take profit? So we enter at the close of this candle. So we will enter exactly at that level. Okay? Then our stop loss is at the low of this candle. And our first take profit is at a 1-to-1 risk reward. What does 1-to-1 risk reward means? 1-to-1 risk reward is simply the distance from your entry to your stop loss. That is the same amount of pips you want to take your first profit at. Okay? So it simply means this is our risk and this will be our reward. And both of these distances from the entry to the stop loss and from the entry to the take profit is exactly the same distance. Alright? So our risk and our reward is the same size. That is all 1-to-1 risk reward means. Okay, there's another question here. Aviola, can we get the trading video for further study? Yes, Aviola, I believe the video will be available when I'm done. It will take a day or two, and it will be uploaded under the educational section. Alright, so you guys are more than welcome to go and have a look there. Okay, so this is how we buy. Now, that is our take profit, so let's see what happened. Okay, this is the same example, guys. This was our inside, meaning the candle closed inside the two blue lines. This close, the very next candle is also inside the two blue lines, and the very next candle is outside. So we say inside, inside, outside. Okay, so at the close of this candle, we bought, we put our stop loss there, and after a few candles, the market went straight up and took our take profit. So that is our first take profit. Now, the second one, is a dynamic exit. Okay, so like I told you guys in the beginning, right? There is a fixed stop loss and take profit, but we also have a condition where we wait for the market, all right, to tell us when to exit. So our second condition for exiting, okay, and okay, let me pause there. How can we get to exit conditions? So when you have an entry, you will simply have to enter two positions. So if this is a buy, let's see, is it a valid buy? Inside, inside, outside. So this one is inside the two blue lines, and outside. So we have a valid buy entry there. And our stop loss is here, our take profit is there. So that is the first position we enter. Immediately, okay, we enter exactly another position as well, okay? And the second position, we will only exit it when this condition that I'm going to explain now is true. So, how do we exit our second position? Our second exit is at the close of the second consecutive candle on the opposite side of the simple moving average from where we opened the trade. So let's take a look at this example. Guys, this is still exactly the same example. Inside, inside, outside, we enter two positions. Both of those positions, the stop loss is at the bottom here, but the one position has got a take profit there, and the other position, okay, we're going to wait for it to close. We're going to wait for two closes on the opposite side of the black line or the Bollinger middle line. So this is the first close on the opposite side of the black line, and that is the second close on the opposite side of the black line, meaning we opened above the black line, the position, so we're going to close below the black line. All right, and we will exit the trade there for a very nice 1 to 14 risk reward. Okay. Okay, guys, let me just quickly see. There's a few questions. Sammy Madi, any time frame? Sammy, I'm going to cover the time frame in a few slides, but yes, the time frame is always a good question, and it's very much dependent on your own situation as well, but I will answer that in a few slides, Sammy. Then Chukwemeka, my cursor, okay, I'm not sure if you can see it now. I think there might be a setting on your side. Julius, okay, there's two people now that's saying they cannot see my cursor. Guys, I think there might be a setting on your side where you can look at my cursor. But from my side, I think most people can see my my cursor. Okay, then Benedict's asking if I'm personally using the strategy. Yes, Benedict, I like the strategy. It's something I developed myself with a lot of testing. Okay, Barnabas, yes. Barnabas is asking, do we enter two positions at the same time? Yes. So as soon as you have a buy entry, Barnabas, you're going to enter two positions, meaning you're going to press the buy button twice. You're going to have two buys. Both of them, you're going to put the stop loss over here. The one of those positions, you're going to put a take profit. The other one is not going to have a take profit. The other one is a dynamic exit where we wait for the market to tell us when we can exit. Okay. Let me see. Okay. Sahu Godson is asking a very good question, saying which is the better advantage, exit 1 or exit 2? And that is the magic of this strategy, Sahu. Both of them work together to give you good profits. Okay, sometimes the market will only move a little bit in your favor, and that's why that one-to-one take profit is there, to capitalize on those small moves. Okay, but sometimes the market will make huge trending moves, and that's why take profit 2 is there, to catch some of those very big moves. The bottom line is, once you have reached take profit 1-to-1, you are not allowed to lose any more money. Okay, so I hope that helps. Right. Okay, guys, I'm going to continue. So now we've got our entries and our exits. Let's quickly look at a sell trade. Okay, so our first condition again is inside, inside, and then outside. Okay, so let's look what happened. Inside, inside, outside. We immediately sell at this position. Our stop loss is at the high of the candle, and our first take profit is at a 1-to-1. So, Barnabas, just to answer you again on your earlier question, when we reach the close of this candle, we're going to enter 2 sell positions. Both of them will have a stop loss at this level, and one of them will have a take profit at this level. So let's continue and see what happened. Okay, the market went against us a little bit, almost took us out, and then the market just went down, 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 and it reached our first take profit level. So right over here, at this black line, we took our first profit. Okay, now let's continue. Still the same example. Okay, now our second exit, we look for 2 closes above the black line. So that's the first close, and that is the second close. So we will close our second position, okay, right over there. And then we will receive a nice 1 to 3 risk reward. And remember, this will always be different. Okay, sometimes your second position will go back to a loss. You will go here, reach your take profit 1-to-1, and then the position will reverse and go to a stop loss. But even if take profit, or even if your second position go to your stop loss, you're still not allowed to lose money. Okay, that's why the position size of your first position must be at least double the size of your second position. Okay, right. Okay, let's continue. Now let's look at a loss. Okay, now a lot of people that I've trained, I realize they've got the perception that a losing trade is something bad. Now, some of you will be surprised if I tell you it's nothing bad at all. It's what we call the cost of business. Okay? Does any one of you know a business in the world where you only get income and you've got no expenses at all? Not even one expense. Okay? Exactly. All the jobs in the world, okay, has got something that brings money in, but it's also asking a few times for money to go out. Let's take an example. Let's say you have your own delivery van, and you deliver flowers and parcels and whatever it may be, food, whatever, but you have your own delivery van. Now, every time you deliver something, you get money. The people will pay you for delivering whatever you delivered. But at some stage, you will need to put petrol in that van. At some stage, you will need to buy new tires. After a few months, you would need to service the van. Okay? And that is where the business asks for some money as well. Yes, it's giving you some income, but every now and then it's also asking for some money to leave your hands. Now, this is nothing different in trading. We have winning positions that brings us income, and we have losing positions, okay, that ask some money from us. So, even in trading, we've got the deliveries where we get money, or we've got the winning positions where we get money, and we have to buy a set of tires that takes our money. Sometimes our position hits our stop loss, and it takes some of our money. This is not a problem. Having a losing trade is nothing negative. It is part of trading. You should see it in the sense that it is part of doing business. Okay? So I hope that is clear to everyone. All right? Okay, let me just look. There's a few more questions here. Okay. Benedict is saying the problem on his side is that the expenses is more than his income. Okay, I'm sorry to hear that, Benedict. I hope after this lessons today, you might have some light on that. Okay, and this is exactly, guys, why I'm covering a loss as well. This is not, if you are looking for a strategy that's winning 100% of the time, ladies and gentlemen, this is not it. Good luck with that. I don't think there's a strategy that won 100% of the time. Okay, so people might claim there is, but I very strongly doubt that. Nevertheless, we are not here to discuss other strategies. I want to show you how do I handle a loss in my strategy. So what I do, I follow exactly the same rules, nothing else. Inside, inside, out. From there, I buy at the close of this candle. I put the stop loss at the low, and what happened? Exactly the next candle, it took me out for a loss. But I'm going to emphasize it. It took me out at a predefined, pre-calculated loss. I knew before I entered the trade, I'm only risking 1% or 0.5% or 2% of my account. I knew exactly that if the market would turn around and hit my stop loss, I will lose exactly this specific amount of money. Okay? And that makes all the difference. All right? That ensures that when you put tires on your vehicle, all right, you are not putting tires on your vehicle that's going to make you bankrupt. When the money leaves your trading account, you make sure that it's small amounts, okay, instead of one or two massive amounts. Okay, so myself, I always put the stop loss at the low. Okay, for this specific strategy, I put the stop loss at the low, and if the market takes me out, no problem. It's part of doing business. Tomorrow I get a winning trade and everything is good again. Okay, now if I have to summarize, okay, let me put it like this. If you cannot explain your strategy to someone that's 6 years old, your strategy is too complex. Okay? I'll say that again, guys. If you cannot explain your strategy, okay, to a 6-year-old, your strategy is too complex. So, how would I explain this strategy to a 6-year-old? I would simply say, look, on your chart, you'll have 3 lines, a black one, a top blue one, and a bottom blue one. Then you'll have a lot of boxes. They call them candlesticks on your chart. You are looking for a candlestick or a box inside the 2 blue lines. The very next one, a box inside the 2 blue lines. And then you're looking for a box that's outside the blue line. And if it went outside the top blue line, you will buy over there. You will put your stop loss over there, and you will have a 1-to-1 risk reward over there. Finished. Then you are only going to wait for the first, second box below the black line, and you close your last position. Guys, is that simple? Right? It is this simple. And if you want to be very technical, you can say this is the top 1 standard deviation line, the Bollinger middle band, and the bottom 1 standard deviation line. This is a buy entry. Simple as that. Sell entry exactly the same. You will have 3 lines, a blue, a black, and a blue. You look for an inside, a box inside the 2 blue lines, inside the 2 blue lines, and outside the 2 blue lines. If it breaks out below the bottom blue line, you enter a sell over there, a stop loss over there, and a 1-to-1 take profit there. Then you look for the first, the second box above the black line, and you close your position. It is that simple, guys. So this is a summary of how we trade. All right. Let me just see. There's a few more questions. Okay, Barnabas is asking if it's a doji. Yes, you still, as long as the closing price is out, inside, outside, Barnabas, you will enter that trade. Okay, how can I identify the trend? Jairo, Andres, Rativa. Okay, so Jairo, the trend, I'm getting to the next slide when we get to the filters. I've got a very effective technique to help you stay on the right side of the trend. Which period do we use? Okay, so Jairo, no shift, and the period of the Bollinger Bands is 20. Okay, Rahul is asking regarding a trailing stop. Okay, Rahul, the question I also get is, do we use trailing stops or do we use break even? No, no, no. Guys, I've tested this over hundreds and hundreds and hundreds of trades. You do not use a trailing stop and you do not set it to break even. Okay? It's not good for the strategy. What will happen? Okay? You will enter a buy, for instance. Okay? Over here. The market will go in your favor. Each take profit 1-to-1. Come down, take you out at the stop. Alright? And then go back in your favor again. So no, we do not use break even or trailing stops. Right. Okay, time frames. Okungo. Yes, it works for all time frames. David, yes, I think this session is recorded. Okay, Saleh. Okay, Saleh Alada. Guys, sorry if I pronounce it wrongly. Saleh Alada. Time frame. You can use it any time frame. I'll cover that now as well. Okay, then Truong, we're getting to this 2 standard deviation line now in a few minutes. Okay, Daniel, same to you. I'm going to cover the 2 standard deviation lines now. Excellent. Okay, guys, what I can see is a couple of questions regarding the time frame, and there's a couple of questions regarding the second deviation line and the trend. Okay, so what we're going to do now, I'm going to go to my MetaTrader 4 platform, okay, and we are quickly going to look at a few examples. Okay, I see we still have about 12 minutes left. Okay, and then after that, I'm going to do the filters with you guys and the trading plan, and then we'll have some time for some more questions as well. Okay, so let's cover the first thing. Let's just look at a few examples. Okay, right. So what is the criteria, or yeah, how do we enter? Okay, so this is, what is this? USD CAD 1 hour. Okay, so what we look for is the inside, outside. So as you can see, there's 3 candles over here. 1, 2, 3. It's inside, and outside. So what are we going to do? We are going to buy at this level here, and our stop loss, okay, is going to be at the low of that candle. Then our 1-to-1 take profit will be more or less there. Okay, so this is where we buy. Okay. All right. I see there's a lot of people that cannot see my MetaTrader 4. Okay, guys, what you're supposed to see at the moment is my MetaTrader 4. Okay, seems like there's a bit of a problem. Okay, so it's still stuck on my summary. Can't see MetaTrader 4. Okay, guys, I don't know what's wrong here now. Summary screen. Okay, let me see. Okay, guys, this is not good. Okay, guys, let me see if we can get this to show. Let me exit here. Okay, Guys, can you see my MetaTrader 4 now? Okay, still not. This is not good. Let's see. Okay. See the desktop only. Okay, guys. Let's see what we can do here. Okay. Right, guys. Only desktop. Okay, on my side, guys, the MetaTrader 4 platform is open, but I can see none of you can see it at this moment. Okay, I do not know what to do now regarding this. Let's see, guys. Maybe I can shift something around here. Seems like technology is giving us a bit of a problem today. Still nothing, guys. Desktop only, MT4 not visible. Guys, sorry for that. Okay, I'm gonna try to open my MT4 again. Let's see if that works. If not, we will make a plan, see how we can go. Okay, MetaTrader 4 is open again. Okay. Okay. Guys, no MT4 yet. Alright. Okay, ladies and gentlemen, sorry for that. Seems like we're having some trouble with technology. Okay, what I will do, I will continue with the presentation, and perhaps in a while we can try the MetaTrader 4 again and see if that will work. Okay. Right, ladies and gentlemen, can you see my presentation again, the summary of the strategy? Excellent. Guys, thank you so much. Thank you so much. Let's see. Let's continue. So what I will do now, okay, so we've got our buy and sell examples. Now we're going to talk about filters. Okay, and hopefully when we're done here, our MetaTrader might be cooperating a little bit better. But why do we have filters? Why do we have filters? Okay, so as I discussed earlier, ladies and gentlemen, a filter is there to help us stay on the correct side of the market. Okay, it will help us, okay, to not enter, okay, when the setup is not that strong. And this is something we need to learn as traders more, I think, is that sometimes not entering a position will protect your money. Okay, sometimes we feel as traders we must enter the market the whole time. We must have 20 trades a day. But sometimes not entering the market will help you to grow faster by not losing your money. Okay, so let's talk about the first filter we use. The first filter we use, as you can see over here, there's a yellow line. Okay, and this yellow line is a 200 period simple moving average. What does the 200 period moving average tells us? Okay, that gives us an indication of the longer term trend. So in this case, what would you say is the long term trend? Up or down? Okay, I think it's very clear that the longer term trend is down. Exactly, the longer term trend is down. Okay, and you all heard it being said, the trend is your friend and everything. Well, that is true, guys. I also believe that the trend is definitely your friend. Okay, so the first filter we use is a 200 period simple moving average, and if the prices are below the yellow line, we only look for sells. And if the price is above the yellow line, we only look for buys. So let's see how that works out practically. Here we can see there's an inside out. You guys agree with me this is a valid buy signal. But look, the market just went up for a small distance and then it went down. We probably would have reached maybe 1-to-1 take profit, but then it just went down. So one of the filters you can apply is to say, okay, if I'm not in the same direction as the long-term trend, which in this case is down, I'm not going to take the position. Okay? Or I'm going to enter with less risk. That's what I usually do. I still enter all the positions, but with less risk. Okay? Let's look at another example. Here's a valid trade as well. Inside, inside, out. And look here. It's a valid buy signal, but it's not in the same direction as the long-term trend, so probably you will not enter or enter only with a small amount. And over there as well, inside, inside, outside. And it's a buy trade, but look, the market just went up for a small distance and then went down again. Okay? Right. Now, the second thing we can add, the second question or the second filter is what is the size of the candle. So, and this is where the red line comes in. I know there's a couple of you that ask regarding the red line, okay? And this is where the red line comes in. If the size of the candle is too big, okay, usually, not always, but usually there's a bit of a retracement, okay? As you can see in this example. Also, if the size of the candle is small, like in this example, look the small distance, okay? The small distance that the market have to travel to reach our one-to-one take profit. Look, the candle is small. Within 1, 2, at the third candle, the market reached our take profit because the candle is small, so our one-to-one risk is small as well. Look at this. It's a little bit a bigger candle, okay? And it took 1, 2, 3, 4, 5, 6 or 7 candles before the market reached our take profit. Okay? This is, however, a very big candle. So this took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 or 17 candles before the market reached our take profit. So can you see with the small take profit, with the small candles, our take profit is reached much quicker, but the big candles can take some time because the market must travel much further. Also, with a very big candle, okay, there's usually a retracement after that. Not always, but a lot of times, as you can see here. Okay. So, now I want to tell you guys about the third filter, of which I personally believe is the most powerful filter. And this is called a Bollinger Band squeeze. So what is a Bollinger Band squeeze? This is when the top and the bottom line of the Bollinger Bands, usually the two red lines, are much closer together than usually. As you can see over here, this is a very big distance between the bottom red line and the top red line. But if you look there, can you see how small that distance is? Okay? Look, there's a Bollinger Band squeeze. What happens after a Bollinger Band squeeze? Look at this massive move downwards. And let's look again. There's a Bollinger Band squeeze. Can you see the top red and bottom red bands are very close to each other? And what happened immediately after that? A very strong move to the downside. Usually, there's a fake move to the top and then a strong move to the downside. Okay? But because of our rules, a lot of times it will keep us out of these fake trades as well, most of the time. Again, a Bollinger Band squeeze, and look at this massive down move immediately after that. All right? So the Bollinger Band squeeze, in my opinion, is a very, very powerful tool as well. Okay? Now, guys, let's quickly see, before we go to the type of traders, let's see if we can win with MetaTrader 4 now. Okay. No, doesn't seem like you guys can see MetaTrader 4. Let's see now. No, I've got a small screen here this side. No, desktop only. Guys, seems like we are not having a lot of luck with my MetaTrader today. I don't know what's happening over here. Okay, so it seems we will not be able to do MetaTrader. Ah, there we go. There we go. There was something. There was something. Right, let me try again. Let me try again. Okay, now it seems like we're having a little bit more luck. Okay, excellent, excellent. Okay. Guys, seems like we have victory. We have victory. I'm so glad. I'm so glad. Excellent. Okay, now we have MetaTrader 4. Now I'm going to answer your questions regarding time frame, and we're going to look at a few examples. All right. So let me make this a little bit smaller, zoom a little bit out. Okay, guys, can you all see my MetaTrader 4 now? Excellent, excellent. Guys, thank you so much for that. Now, let's quickly look at one or two examples. I see we basically reached our time limit, guys. So I'm going to try and be a little bit fast here. Sorry for this technological trouble. But here is our Bollinger Bands. Okay, so what we will do, we look for an inside, inside, outside. Okay, and then we're going to buy over here. Our stop loss is over there, and our one-to-one take profit is there. So as the market moves, let's see, probably it would reach our take profit over there. Okay, so now our first position is out of the market, but we are still having a second position. So where do we exit the second position? We entered it over here. Now we are looking for the second close below the black line. This middle black line, this one over here. Okay, so the second close is 1, 2, it's right over there. Okay, so our second trade we enter or exit over there. Okay, let's look at another example. Okay, what I will do, I will quickly insert a moving average, a 200 period, because we said we're using that for the long-term trend. Make it nice and thick, and I make it yellow. Excellent. All right. Now let's look at any other currency pair. Let's do Great British Pound. Okay. I like the 1 hour. I also like the 15 minutes. Okay. Let's look at this. The first example we see. Let's look at this. We've got an inside, and an outside. Okay. So what do? We buy over here. Our stop loss is over there. And our one-to-one take profit is more or less that side. So right over there, guys, we reached our first take profit. Now we're looking for the second close below the black line. Over here, we've got our first close, but right after that, the market went up, so we are not out of that position. Then it came down, and over there is our second close. First close and second consecutive close. So we exit our second position over there. All right. Let's look at another example. Euro, Great British Pound. Okay. Let's take one of the most recent examples. Okay. I think here is an excellent example of how powerful a Bollinger Band squeeze is. Okay. As you can see here, guys, we've got a close. Okay, that is not a valid setup. Let's go on a little bit and outside. Okay. Right, let's look at this example. Okay, we've got a very clear Bollinger Band squeeze over there, guys. And here we have the inside, and the outside. So what do? We buy over there. Our stop loss is there. And our one-to-one take profit is right over there. Okay, so by the time it reaches, we do not have to worry anymore because we will not be losing any more money. All right. Now let's look at another currency pair. Let's look at USD JPY, the dollar versus the yen. Okay. So what do we have here? This is an example of the dojis and the gap as well. So I will use this example. There was a question earlier, what if it's the dojis? So here we have two dojis, right over there and over there. It does not matter as long as the close is inside, inside, outside. Okay? Right. We can still enter that position. It's not a problem. All right? So then what we will do, we will enter over there. Okay? The close of this candle. Okay? Our stop will be below that. And I'll take profit 1 to 1 there. So with this position, we would have been stopped out. Okay. Here's another example. Let's look. Okay. There we go. This is also a doji, two more dojis. We've got, it looks like this one is inside, inside, outside. So what do? Our stop loss is there. We enter there. And our 1 to 1 take profit is there. Now, we are still in this position. We are waiting for the market to tell us to enter. Guys, can you see we are still in this position? Raul Gomez, yes, the inside, inside, outside have to be consecutive. So it's inside, inside, outside. Okay? Right, guys, we are still in the trend. We are still in the trend. We are waiting for the market to tell us to exit. And how do we do that? The market is supposed to give us two candles, like here's one, and here's two below the black line. So our second position, we would have exited right over there. Guys, this is a massive, massive trade. Our risk was 5 pips and our reward is about 80 pips, 79 pips. We risk 5 pips to make almost 80 pips. Okay? Is that good, guys? Is that how trend following works? Small losses, 5 pip losses or 10 pip losses, but small losses. And look at this massive gains, guys. I'm going to zoom a little bit out. Look at this massive gains. Okay? And at the workshops, I usually teach strategy or teach a version of this strategy where by now you were still supposed to be in this trade. Okay? And that was a potential, let's see, still a potential 140 pips by only risking 5. Okay? Right. Now, okay, there's a question, is this MetaTrader 4 or 5? So guys, I'm currently working in MetaTrader 4. Okay. Excellent. Now, guys, I'm going to continue with the last few slides. Let me do this. This guy, and we go. Okay. I hope you guys can see my screen now. Excellent. All right. There we go. Okay. Okay, guarding this time frame, guys. Thank you so much. Time frame. You guys keep asking, and I keep explaining. Let's talk about time frame. Let's talk about time frame, and for that, let me go back to the MetaTrader 4. Right. Let's talk about time frame. Okay, guys. As you can see here, okay, on MetaTrader 4, the time frame is 100% dependent on how much time you have available and your skill. So let's look at the advantages and the disadvantages. Firstly, let's look at some facts. Let's look at some facts. This is a 1-minute chart. So this is a very low time frame. Okay? Very, very low time frame. Okay. Let's use another currency pair. See, there's also some gaps and stuff there. All right. This is a 1-minute time frame, guys. Can you see that there is a lot of spikes, a lot of noise? Okay. If I zoom even a little bit out, you can see there's a lot of noise on a 1-minute time frame. Look at this. Look at this. You guys think you'll see something like this on a daily time frame? Not at all. it will not be simple to see something like this on a daily time frame. So on the 1 minute time frames, there's a lot of noise. Let's look at the Euro USD, for instance. Zoom a little bit out. Okay. Guys can see it. There's a lot of noise on the 1 minute time frame. Okay, it's not the type of things you will see on the daily time frame. All right, look at this, just massive moves. Okay, with one candle, massive moves. Where if I would go to the daily time frame, okay, you can see it's a little bit more smooth. Okay, there's not that very big out of proportion candles. So the first point I want to make regarding time frames is lower time frames has got a lot more noise. Okay, that's those erratic movement. Okay, then higher time frames are usually more smooth. Okay, so that's something to consider. Secondly, lower time frames will give you a lot more opportunities. You might have 6, 7, 8, 9, 20 trades a day if you trade the 1 minute time frame. But a lot of them might be false breakouts and false trades. Okay? Then, with the higher time frames, okay, the signals are usually a little bit more reliable. So that's something else to consider. Now, regarding the own time you have available, if you are having a full-time job and you need to be in an office or somewhere at work during the day, you cannot trade the 1 minute time frame because every minute there is a new candle. Every minute a new candle. And you cannot afford to look at your charts minute after minute after minute, or every 5 minutes, or every 15 minutes even. Okay. However, if you have a full-time job and you trade on the daily charts, you only need to look at your charts once a day, and that will be enough. Okay. So regarding time frame, I prefer personally the 1 hour, 4 hour, and if I really have a lot of time on my hands, I will even trade the 15 minutes. Okay, that is my personal preference. Okay, but you need to choose a time frame that will suit your style of trading, number one, and that can suit the amount of time you have available to trade. Okay, so I hope that, guys, I hope that makes sense to you. Okay. Right, let's continue. So that was time frame. Let's quickly talk about what type of trader you are and why trend trading is a little bit difficult. Okay, so we have focused and unfocused traders. And guys, I think if I'm done with this slide, I'm quickly going to give an opportunity for a few more questions, and then I think we need to call it a day. I'm already a little bit over the time, but yes, I understand there were some technological issues as well. All right, guys, so those of you who are still here, let's quickly finish with the last few slides, and then we call it a day. All right, so some traders, okay, let's take this strategy as an example. We'll enter a trade, okay, and it's one winner, the 1-to-1, and then we have a loser, and we've got a second and a third loser in a row, and then 4, 5, 6. Guys, now it's already 6 losers in a row. Now a lot of people will say, this is not for me. This strategy is not working. I'm out of this game. Okay? And they say, no. This is not good. Okay? And they stop trading the strategy. Now they go to another strategy. Alright? And what happened next? Another loser. Now even the people that were still left says, yeah, even us, maybe we don't know. But there will be, in trend trading, there will be a small grouping of people that will not give up, that have tested their strategy, have trust in their strategy, okay, and have the discipline and the perseverance to go through the good and the bad times of trading, and they keep on taking their entries. And just look what happened next. Look what happened next, guys. A very big trade with a 1 to 24 risk-reward ratio. And if you kept on your trade, as I teach in some of the workshops, by now you are going to have a 1 to 56 risk reward. Meaning with this one trade, you could have paid off 56 losing trades. You only had 7 losing trades there, but you are able to pay for 56 losing trades. Okay? Now, what happens? Those people that got out and said, no, this thing is not working, now they see a few people making a lot of money with this strategy. Now they say, okay, we are here again. Just in time for the next losing streak. All right? And that's the beauty of trading, guys. The people with perseverance and discipline are usually the ones that makes trading a success. All right. So ladies and gentlemen, from my side, I think I need to stop here. We will cover the trading plan in the next session. To summarize, you can trade like this. Very complicated. Or you can keep your trading simple. Then you can follow the indicators. Buy. Or you can follow price where it says sell. Guys, the choice is yours. So again, everyone, thank you so much for your attendance at today's webinar. It was lovely to have all of you here, and I will gladly answer your questions now. If there's any one of you who still have a few questions, please feel free to discuss it, send it through, and I will try my utmost best to answer them for you. Okay. Let's see. Okay. Okay, we've got some few questions coming in here. Excellent. Okay. Okay, Chukwemeka, what is the role of the 200 period moving average? Okay, Chukwemeka, the role of the moving average is to help you stay in the same direction as the long-term trend. Okay, so that is the main role of the 200 period moving average. Okay, let's see. Okay, Julius Andrew is asking, how do I draw the short lines on MetaTrader 4? Julius, it's very simple. If I go to my MetaTrader 4, over here you'll see a diagonal line. Okay, I simply click on that diagonal line, and then I left click and hold my left mouse button down, and I drag it to wherever I want, and then I leave the left mouse button, and there's my line. Simple as that. If it keeps on, if it makes a long straight line and not a short one, you right click on the line, you go to trend line properties, and at parameters, then you'll see the ray box will be on. You just take it off, then it will look like mine. However, now I'm going to put the ray button on, and then you'll see the line will be extended. Okay, but I like to use it like this with the ray off, and there you have it. Excellent. Daniel Inaholo, unfortunately, no, I do not have a PDF version of this, but this will probably be recorded. I've got another recording on the website with a similar presentation. So guys, you are more than welcome to go and re-watch these videos over and over again up until you are satisfied and you understand 100%. Okay. Daquin Matambu, yes, it will be available for you after this, as I said, on the website. Okay, Oknongo, yes, the strategy works on all currency pairs. Okay, this is something that's got a universal truth. So any currency pair, any time frame, you can use it. But as I said, with the time frames, there's certain implications. Just as same with some currency pairs. Let's take a look. Some currency pairs is what we call extremely volatile. So you see how the Euro USD looks. Now let's take, for instance, let's look at the USD ZAR, for instance. Let's see, USD ZAR. Okay, can you see this is also a daily time frame, but it's a lot more volatile. Okay, so just take note of that. Okay, can you continue using the strategy when there's news? Okongo, yes, you can still use the strategy if there's news. Why do I not worry about news? Guys, let me explain to you. Why do I not worry about news? If the news comes out, there's a 50% chance that price will go up, and there's a 50% chance that price will go down. So, if it goes up and I was in a buy position, great. Then I reach my take profit very quickly. If it goes down, I hit my stop loss. Great, not a problem. My stop loss was in price. I look for the next trade. No problem. So for me, I don't worry about news, number one. Like I said, the news can go against you, but it can just as well go in your favor. Secondly, I do not have time to look at each and every little news and try to analyze, will the market go up based on this news or will it go down? I don't have time for that. So, myself, I have tested this with news candles, and I've tested this over and over again when there was news in the market, when there was terrorist attacks in the market, when there was trade wars in the market, when there was financial crises in the market. I tested the strategy and it works. So whether there's news or no news, I don't care. If there's an entry, I take it. So I hope that answers you guys as well. All right. Okay, guys, it's a pleasure. I've got a lot of people saying thank you so much. Thank you to you as well, guys. It was really lovely having you here. There's also a couple of more questions. Yes, guys, the webinar will be available. The recording will be available, guys. You're more than welcome. Khan, Andrew. Okay, Nathan, how do you change the middle moving average line color? Okay, I'll quickly go there. On your MetaTrader 4 platform, you double click on this line, okay, and you can see here at style it says black. For this case, let's make it green. Okay, there you go. Now the middle line is green. So I hope that helps. Okay, Adam Lakava, can you please repeat the second rule? Okay, Adam, no problem. We'll wait for the second close on the opposite side, okay, of the middle line. So let's take this as an example. Let's say we sold over inside, outside. So we sold over here. Now we look for the second close on the opposite side of the green line. I changed the color now just to explain. So this is the first close. Second close is below. No, so we don't exit there. We are still in this trend, guys. Okay, we are still in the trend. All right. And here we have our first close, and there's our second close. So we exit the trade right over there. So we entered below the middle line, and we exit the second close above the middle line. Sorry guys, I'm doing it wrong here. It's over here, first, second. Oh, it's correct, First, second, over there. Sorry guys, my mistake. So we look for the second close on the opposite side of the green line. Okay, so there's our first close and there's our second close. Guys, is this not a very, very beautiful trade? We entered over there, stop loss there, and we ride this trend all the way down to there. Okay. Okay, Adrian. Adrian is asking, are there particular times you may advise we don't use the strategy? Adrian, definitely no. I would advise, okay, you take all your entries, especially on the higher time frames. Okay, and why do I say that? Because with trend trading, with trend trading, guys, let me not hide this from you. Okay, with trend trading, you will have more losers than winners, usually. Okay, but your winners will be much bigger compared to your losers. Okay, so you need to take each and every entry, Adrian, to make sure that when you catch the winners, you are in the market. When the winners appear, you are in the market. You will never know beforehand whether it's going to be a winner or a loser. So you take all the trades. However, Adrian, I would say with the smaller time frames, you might go and have a little bit of look. That's usually a different story. If you go down to the 15 and the 5 minutes, sometimes even the 1 hour charts, that might be a little bit different. But for anything higher than 1 hour time frame, you take all your entries. Okay. Okay, where do I get the Bollinger Bands on MT4? Okay. Now lot size per trade, should we fix? Okay, this is a very good question. Benedict Jacques is asking, how do we determine our lot size per trade? Should it be fixed per pip on every trade? Okay. Benedict, during my workshops and my seminars, I go a lot into risk management. Okay, and I can see you have got the right mindset, because Benedict is asking about the risk before he's thinking about his reward. Okay, so it's very important, guys, that you manage your risk. So Benedict, the short answer for this is you only risk a certain percentage of your account. But those formulas, it takes some time to explain, all right? So I wish at some stage you can attend one of my seminars. Then it would be lovely for me to explain that to you as well. Okay. Lance, Sean, thank you very much. Thank you for you as well. It was lovely having you here. Okay, Adrian, my time frame, like I said, if I have a lot of time on my hands, I will trade the 15 minutes, even the 5, but usually I trade the 1 and the 4 hour time frames. Daily as well, daily I can strongly recommend. Okay. Okay, Prince Kojo. Prince is asking if candlesticks formations has got a lot of influence on the Bollinger Bands. I do not look at candlesticks in this specific strategy. I use some other strategy with candlestick formations. Some of them are very reliable. But for the Bollinger Band strategy, guys, I don't look at candlesticks. I don't look at anything else. I'll take you guys back to the first rule. You keep it as simple as possible. So no candlesticks, nothing else, just the way I explained it to keep it simple. Okay. Right. Okay. There's a few guys that are asking again about the second Bollinger Band. Okay. The second Bollinger Band, guys, is to gauge if the candle is too big. So usually, all right, if the candle is too big, I mean, that is very subjective to say, because remember, that's one of our filters. We use 3 filters with the strategy. We look at the long-term moving average, okay, the 200 period moving average. We look at the size of the candle, and we look at the Bollinger squeeze. So if the candle is too big, it will usually pass the red line as well. Look, like this one. We'd say the candle is a little bit big to enter, okay? Or let me look at another example. This one, say it's a little bit big. I'll zoom out. Yes, you see, this is a valid buy setup, okay? Because we have inside, inside, outside. But look at this candle, guys. I'll zoom a little bit in. So we have our entry, inside, inside, outside, okay? So we are supposed to buy here. Our stop loss is supposed to be, sorry guys, this mouse is not working. And our stop loss is supposed to be there. But this candle already passed the red one. So we say it's a little bit big, this candle. Okay, so it does not count that much in our favor. Okay, Barnabas, yes, 1 hour is good. Okay, Rasik, okay, I just covered the red line as well. Saleh, Alada, okay, what will I do when the market moves in a range? Okay, that's a very good question. Okay, if the market moves in a range, that is also considered, okay, a Bollinger Band squeeze. So let's look at this. And usually there's very, very strong breakouts after that. Let's see if we can find an example. Okay, like there. Over there is a Bollinger squeeze and a strong move. Okay, a Bollinger Squeeze over there, or a range and a strong move. Okay, look at this, Bollinger Squeeze and a very strong move after that. Okay, so usually Sela, after a range, there's usually a very strong breakout. Okay. Excellent, guys. I think that's about it. I hope I answered most of your questions, guys. This was lovely to have all of you here. Thank you so much for everyone that's been here. And in 2 weeks' time, I will be presenting a little bit about chart types and how that can help us with our analysis as well. And there's a lot of online material from Professor Andreas and myself and the education department. So please feel free, guys. If you still struggle with MetaTrader 4 or you want to know some of the basics in Forex, please, guys, log into your FXTM account. Go and look under education. There is a lot of resources. So everyone, from my side, thank you so much for being here today. It was lovely having you all here, and I really hope that you all learned a lot today. So thank you so much, guys. Bye-bye.